Good morning, everybody, or good afternoon, wherever you're at in the country. Rob Edwards here with Great Plains, and we welcome you to today's webinar broadcast, Wealth Transfer Sales Opportunities. Appreciate you joining us today and learning more about offering wealth transfer opportunities to your clients that can put their leave-behind money to better use by immediately increasing the value of their estate, passing assets generally income tax-free, and avoiding probate. We have accelerated benefits available if the insured qualifies, and simplified issue decisions in a couple of days, and Equitrust is great to work with. Matt Stiles, Senior Sales Consultant with Equitrust, will get into all that today. He's our presenter, and I want to thank Matt for joining us. I want to remind everyone that we do not open the phone lines, so please use the question dialog box. I'll pass those questions on to Matt at the end of the webinar. We anticipate going about 25 minutes or so today, so we'll have an opportunity at the end of the call to address those questions. Matt, tell us how to recognize wealth transfer sales opportunities and SBL lineup at Equitrust.
Thanks, Rob. Really appreciate that. Thank you, everybody, for joining. Yeah, we've got a couple great products as far as that field goes for wealth transfer, designed for clients that are looking, like Rob said, simplified underwriting we have. And today I'm going to kind of pinpoint where our products stand out, what type of clients you might have already, and what type of clients you can look for when you're out in the field as far as where these products are going to be a good fit for you. So I want to appreciate the time everybody's carved out today. And first of all, I'm going to start off very simply. What is a wealth transfer going to do for your client? Simple terms, we'll take a $50,000 premium on a 60-year-old female, and instantly day one we'll turn that into a $103,000 death benefit. That's the minimum guaranteed death benefit for that client. So you're immediately increasing the value of her estate, and you're turning that into a tax-free death benefit. Just kind of one of the objectives that this can do. But then also a big selling point for the single premium life, what I hear back a lot from the field, is what we can do for living benefits. Our living benefit rider, we're taking that same $50,000, $103,000 for living benefits, chronic illness, nursing care, and I'll go into a little more detail on how that works. But really a great feature of this, and you're fulfilling some basic client objectives. I need to pass this money on to my kids or grandkids, or I'm going to need this for nursing care, or if I become chronically ill, that's what I'm going to need this money for. We're fulfilling those needs for the client. Run into a lot of annuity agents out there that say, geez, I got a client, but we don't want to go through a fully underwritten product. We don't want to have to wait 5 weeks and then have it declined anyway. What we've come up with here at Equitrust, we have simplified issue. What that basically means is if the client's table 4 or better, they're going to get approved. I mean, that's pretty generic terms. There's some exceptions to that. But generally speaking, if they're table 4 or better for like a fully underwritten, they're going to be approved for our product. What we got is a free qualification chart. Basically, that's just on the agent guide. It gives you some general guidelines on what to look for. Obviously, there's some health questions on the app. I believe there's 11 health questions on the app. But one thing about our app is if you answer yes to some of those, it doesn't necessarily mean it's a knockout. It means we're going to need a little more information about the client's medical history. But a yes on the app does not necessarily mean it's a decline. Point of sale interview. Right now our point of sale interviews, most agents just do that phone call right when they're with the client to take the app. They're running at 17 minutes when I checked yesterday. I just wanted to see how long. We get reports on that. Taking about 17 minutes to go through those phone interviews. So fairly painless. They pull prescription records. They get permission from your client to pull that on the call. That kind of helps the phone interview person along, but a fairly painless process there. And the big one is there's no exams or fluid draws, so no paramed coming to the house. A lot of agents, especially annuity agents out there writing this, like the simplicity of this without having to go through the full underwriting. APS at underwriter discretion. We'll order a physician statement if it's $300,000 or more, or if there's something that's borderline and we want the underwriter needs a little more clarification. Total right now, though, as of when I looked yesterday, just just under 14% we're ordering an APS on. So that means over 86% we're not having to get an APS, just to give you a feel for how often we have to go out and get that. And then usually, if we don't have to order a APS, we get an underwriting decision. Right now it's taking about 24 hours. You take the app, you fax in the app to Equitrust, do that phone interview. You can do it at the time of sale, and get that into us, and we'll give a decision usually within 24 to 48 hours. And you'll get a real-time notification. Great Plains gets shot an email, the agent gets shot an email, hey, your client's been approved, you know, now we're just waiting for funds or whatever the case might be. So pretty quick process on the underwriting there with us. A few things about the product itself, just pretty straightforward here. It allows for a 5% penalty-free withdrawal. The Wealth Max is not designed to like supplement retirement income, but it's there if you need it for like, hey, we want to just take a little money out of there. It just proportionally reduces the death benefit. There are loans available too. It's not really designed for loans because it's not participating, but if something comes up and they want to take some money out and maybe they're going to look at repaying it, there's a loan option available. But a big feature is the return of premium, which is on the Wealth Max product. Basically what that does is gives the client the peace of mind, if I need my money back, they can get their premium back. So in that first example, client puts $50,000 in with us, something comes up, you know, a year later, 2 years later, gosh, I wasn't expecting this, we had this come up, you know, as the agent that happens once in a while, the client can get their $50,000 back. Chances are if they cash it in the first couple years, it's just going to be their premium back only. But it's just peace of mind when you're sitting down across from them at their kitchen table, letting them know, hey, if something comes up, you can have your money back. So the safety there with the return of premium is a nice feature to have. And then the accelerated death benefit, that's driving a lot of the sales on these products, is just being able to have that accelerated death benefit for chronic care, nursing care, and I'll give you some examples of that here too. Here's just a brief overview of that living benefit rider, or accelerated death benefit rider as we call it. If the client becomes terminally ill, they can take 95% of their death benefit in a lump sum. So if a doctor says, hey, unfortunately you got less than 12 months to live, the client says, boy, I'd really like to just give this money to my kids now. I can accelerate this, get a check for 95% of the death benefit. That would be tax-free since we're accelerating the death benefit for terminal illness. Nursing care, that's a big one, obviously. They become confined to a nursing care facility. That'd have to be like a qualified nursing care facility, expected to be a permanent stay in the nursing care confinement. They can take the full death benefit paid out over 3 years, so 36 months, take that full death benefit. Or let's say they already have a long-term care policy that's paying for that. They got that covered, but they want to get this money out of this contract. They can take 85% of the death benefit in a lump sum and spend that on whatever they want. So we're not paying back the nursing home, it goes directly to the client on those. And then finally, as far as what we have on this chronic care, and that's a big one too. If someone's in their home, maybe they're unable to perform 2 of the 6 daily activities of living, a family member's taking care of them, whatever the case might be, they can trigger the chronic care benefit, the full death benefit paid out over 5 years. So we'll take that death benefit, divide it by 60 months, and they'll have that deposited directly to them. Or if they want the lump sum option, they'd get 75% of the death benefit. Just a few more standard features before I talk more on the product. What are the key factors of selling it? The standard features 50 to 85. We don't backdate. So if the client's already turned 86, we would need the app before they turn 86. Also, if they're 49, we can't take it until they're 50. Pretty straightforward there. We take current age as far as when the funds arrive, and also for illustration purposes, it's not age nearest, just as a heads up. Single premium, minimum 10,000. The max face amount would depend on their age, but generally speaking, up to 750 on the max face amount. But then the minimum single premium dump in is 10,000. Big key, it's a guaranteed death benefit. So if they don't overloan the policy, once they purchase this, it's a guaranteed death benefit to age 121. So until the client passes, they're guaranteed that death benefit. There is a 10-year declining surrender charge. The policy expense charge and the surrender charge drop off after 10 years. So in the case where they would have to cash it in, they could see potentially some really good gains too over time with some strong competitive cap rates that we offer. Index accounts available that I'll show you here, the cap rates and what we got available. It looks a lot like an index policy when they're getting their indexed annuity, I should say, when they're getting their annual statements as far as the index accounts. Big one is a 12% bonus added right away. It's credited right away into the account. They'll see that day one. It'll bump up the values on the account. And it has that return of premium guarantee automatically built in, no cost. Here's the current cap rates. Obviously very competitive. There aren't any annuity companies offering cap rates like that on an index product. But since it's life insurance, we're able to offer higher cap rates, and we've seen some great returns over the last 5 years since we've had this product, a little over 5 years now. We've seen some clients when the S&P was doing well, that monthly cap and then the 2-year cap, which is currently no cap. And actually, since we've rolled out that 2-year strategy on this product, we've never had a cap on it, even upon renewals. So some competitive caps and great renewal cap rates too. Here's what we're illustrating those at, all around 5. The point-to-point's the best at 5.55 illustrated rate. That's just used for illustration purposes, obviously, just to give the client a feel for what they might expect as far as returns on the illustration. Here is a copy of an illustration, because a lot of times we get questions on, let me zoom in on a portion of this here so you can see it. This is that 60-year-old female, 50,000. You see the premium outlay. It's a little confusing the way we did that, but because of the bonus, they're getting that extra $6,000 dumped in right away. So it's showing 56,000 as the premium in year one with that bonus. That's bumping up the guaranteed death benefit to the 117. And then this is assuming no returns, so that's going to come back down, the death benefit, to the minimum guaranteed, the 103. But also you see the cash surrender value is never less than 50,000. That's that return of premium feature, so if they had to cash it in. But then let me jump over to the non-guaranteed here, and you can see where this is showing 5.55% return. That death benefit's higher early on, and you see the bonus and how that works. Oftentimes we get questions on the illustration right away there. But just give you an overview of what you're looking at there, and that death benefit's higher throughout the first several years for the client because of that 12% bonus. Just want to give you a couple scenarios here for the chronic illness and the nursing care confinement. We got Betty. She's a 60-year-old female, pretty standard what we've done here, but Betty's objectives, you meet with Betty. She says, well, basically I got this money sitting in the bank at the CD down at the local bank earning 2%. Ideally, I just want to give this to my grandchildren. I am concerned of potential, medical costs, nursing home care, things that might come up over the next few years for me. She could leave that in the CD. Another option would be an annuity for her, or we could look at this Wealth Max. This is kind of an interesting piece. It just shows you the death benefit comparison. Obviously, with the CD, when you buy it, 50,000 in, you'll get 50,000 out if you die right away. After 10 years at 2%, a little over 57. 20 years, that's grown to a little over 67,000 on the bank CD. The annuity at 3%, obviously that's going to do a little better. You see the values there after 10 and 20 years growing at 3%. Well, the Wealth Max, the death benefit right away is the 103. After 10 years, you're guaranteed at least 103. 20 years, at least 103. Let's assume this is showing a 5% illustrated rate, so a little less than what we're illustrating the point-to-point. But at 5%, after 10 years, 119,647. After 20 years, 131,839. So she passes away at age 80. Her grandkids are getting the 131 tax-free, as opposed to if that annuity at 3%, they're getting a check for 79,000 with 29,000 of that taxable gain on them too. So it just kind of gives you the benefit of the single premium life over some similar products that might be sold. And then just briefly here on if she becomes terminally ill On that, she'd get a minimum amount. Keep in mind, if it's grown, she'd get more. She becomes terminally ill and wants to cash it in. We'll send her a check for $98,000, would be tax-free also. On her $50,000 deposit, she becomes confined to a nursing home. She can get a lump sum, or as most clients would do, they're going to get that paid out, the full $103,000 paid out over 3 years. So we're going to send her 36 payments of $2,868 a month. Can use that to pay the nursing home, or she can use that for whatever she likes. Chronic illness, obviously a big one too. 5 years, we're going to pay that out 60 payments, $1,720, which is going to come out to $103,000. Keep in mind that's the minimum amount also. And here's what it shows on the illustration as far as what we actually show there on page 8 of the illustration, accelerated death benefit examples. And this is, again, the minimum amount, assuming no loans on the contract, that same 60-year-old female, and we outline those amounts here for your client too. So it does show right there. You can tell your client, hey, you become confined to a nursing home, you're guaranteed at least the $2,868 a month for 3 years to pay out. So basic, if you take nothing else from the Wealth Max, remember the 3 basic things we like to say this thing does for your clients. You're guaranteeing that death benefit, tax-free death benefit. You have the living benefits is a big one for chronic care, nursing care, and then also the return of premiums, just a nice feature. It's peace of mind. We don't have very many clients that have triggered the surrender where we've actually sent them just the premium back, but it's just the peace of mind knowing that, hey, if all else, I can have my premium back on this product. So you're giving them so much more features than that bank CD, paying 2% and not really doing anything for them. We see a lot of money coming over from those type of investments into this product. We have a show book out. Great Plains will probably testify to this. Is the show book, it's about 14 pages, big print, it's easy to read, it's client approved. So when you're sitting down to make this sale, they'll have a lot of questions. This will help you answer them. Sometimes you need to show them a chart of what you're talking about. It gives some good examples. This is available. We can get this to you, or Great Plains would be happy to send this out too. But it's a nice piece that we've got that, like I say, is client approved. And if you're looking at showing this product at all, I would have this in your briefcase heading out to that appointment. Lastly, I want to just touch base briefly on another product that we designed a couple years ago. We had agents come back and say, I was able to sell that Wealth Max to my client. They didn't need the money for retirement income. This was a great fit for them. She also had this IRA. She has to start taking RMDs on it here shortly. She has no need for this, doesn't want it, doesn't need the IRA. She wants to pass this money on also. So what we developed, qualified money, or possibly an annuity that has a large cost basis or a lower cost basis and a lot of gains. They might want to spread those out too. But we've created a single premium immediate annuity, and we use that internally, those payments, to fund an index-linked whole life insurance product. So the client's essentially buying 2 products with one with us. And how that works is we're going to take annual SPIA payments to pay the insurance premium, and the client can choose if they want it spread out over 3, 5, or 10 years. Obviously, if you do the 3-year, the death benefit is going to be a little higher because you're funding the product more quickly. The downfall to that would be it's going to be a larger tax. The 1099 that they're going to get each year is going to be more because you're only dividing the taxable amount by 3 years. If you do the 10 years, it spreads out the taxes more. Taxable portion of the SPIA premium is spread out over each SPIA payment instead of all up front. So that's the advantage of, you got $100,000 in an IRA. If you bought the Wealth Max, you can't move that into a single premium life without it being fully taxable. Well, this way you can take that $100,000 IRA, 401k, 403b, whatever qualified funds you have, move it into a life insurance policy and spread those tax consequences out. Immediate income tax-free death benefit issue. So right away they're getting the life policy that's a tax-free death benefit. But then also they get, if they pass away, the beneficiary would get the life insurance proceeds. But if the SPIA is not fully paid out yet, they're also getting the remaining SPIA payments. We offer a commuted value of the SPIA to the beneficiary if the client passes away before it's fully funded. I know some of our competition with similar product only allows the death benefit, so that's a nice feature to have there. Here's just an example of a potential client. She's got $50,000 in a 401k. She says, I got a pension, my husband's pension, we have Social Security, we got plenty of other sources of income. I don't need to draw on this. Let's take this, let's buy a 5-pay on the wealth pay. We're going to take that $50,000, we're going to move that into the wealth pay life product. So instead of $50,000 being taxable, she's getting a 1099 for $10,660 each year. I've been asked why the $660. Well, we're paying interest on the SPIA, and actually it's a pretty decent payout for a 5-year SPIA. But that's used to fund the life insurance policy. And that's going to give her a minimum, without any growth, a minimum death benefit of $95,261, and that would be effective right away. So just kind of shows the power. That's a simple slide, but it shows what we designed the product for. Basic features on that wealth pay. We did make the minimum issue age 60, so we avoid any under 59.5, and then up to 80. You don't want to do 5 or 10 pay on an 80-year-old. Well, 5 pay would be fine, but you don't want to go too much past that. Is why we cut that off at age 80. Fixed premium, $25,000 minimum on that is the case size, and then the face amount we have a little flexibility, but generally up to a $500,000 face. Has the same 10-year declining surrender schedule on the life portion as the Wealth Max. The underwriting is exactly the same also, so just want to point that out. Funded by the single premium immediate annuity, you have the 3, 5, and 10-year options, the indexed accounts, and I'll show you the cap rates, and then there's just one app. So we get the simplified issue, the simplified underwriting, and just you're filling out one app for both the SPIA policy and the life policy. You'll get 2 policies in the mail, one for the SPIA payments and then one for the life. It is kind of a niche product, but we found that agents that are selling the Wealth Max, they like having this too. I really like that Wealth Max, the client says, but I can't afford that tax hit. Boom, now you got something else to offer them. Current cap rates, I think they're very similar to the Wealth Max. We have a 1-year monthly average participation. It's 100% participation. There's no cap on that. So basically we take a 12-month average of the S&P, and whatever the gain is, they would get 100% of the gain. And then we have your traditional annual point-to-point cap and then the monthly cap. Here's what they're illustrating at. It's like a 20-year look back to get those, but that's what they're illustrating at. And again, we've seen some good returns. Obviously, the volatility of the S&P over the last year has hurt some of these, but all in all, the 2 years we've had this, we've seen some great returns. Last thing I want to talk about before I wrap it up is agents want to know, well, what type of clients are we looking for here? Where's the money coming from? Bank CDs, as I mentioned, it's a big one. I think we did kind of a look on all the money that we're bringing in, the replacements, that sort of thing. 45% of our Wealth Max is funded by bank CDs. Obviously, that lazy money, as it's called, that checking account, money market, money that's maybe sitting there. Hey, I got $60,000 in my savings. I really only need, say, $20,000 for a rainy day. Let's take that $40,000 and make it go to work for us. We can put it in the Wealth Max, have that death benefit, and still have enough there for the client. Annuities, basically, if it's not needed for just regular retirement income, annuities are designed for income you can't outlive, basically while you're healthy. Move that, if it's underperforming an annuity, put it in the Wealth Max to give them better cap rates, the death benefit, the accelerated death benefit. Life insurance policy, that one's a little trickier, but say they're continuing to pay, the premium amounts have gone up. They've reached an age where maybe they don't want to pay on a life policy. If they have cash value of that, you can 1035 exchange that over and keep the non-max status too into our Wealth Max on life insurance policies. And then finally, now we have the ability for qualified accounts for that wealth pay. For a client that's not needing that retirement income, they want to turn that into a life insurance policy. We have the wealth pay. So just pretty straightforward there, but just kind of showing what type of clients are out there that we're seeing money come into these contracts. The thing I want to point out on this slide is that email at the bottom. If you have maybe a client you're sitting down with and have some health issues that, gosh, he's really borderline. I wish I could maybe run this by an underwriter before I sit down and take an app or do a phone interview, waste that 45 minutes if they're going to get declined anyway. Shoot us an email at that lifesales.support. I'm generally the one checking that email. I'll get it right over to an underwriter. We'll get an opinion on something. If there's some prescriptions you're not sure of or whatever, shoot us an email. We're happy to help out. Great Plains does a great job with that too. But that's what I wanted to point out on this slide is we're there for you. You can always call us too, but the email is a great way to get some resolutions on some things. With that said, the agents, Equitrust, Great Plains, we're here to help you achieve your wealth transfer goals. Our sales desk is available. I think we got a great team over there. I'm on the phones generally every day too, so I can help you out. Or give Great Plains a call. Their number's listed here. I want to thank Rob for giving us the time today for this presentation on our two great single premium life products.
Super. Thanks, Matt. And we did have a question. Back when you were covering the nursing home benefit, yes. What happens if the illustration, the sample you had, what happens if she comes out of the nursing home?
She would still get that paid. We're going to need written authorization that it's expected to be a permanent stay. So most people when they go in don't come out. But yeah, if she gets better and comes out, once she triggers that, we don't go back and rescind that in any way. We don't check on that in any way. I mean, we haven't found that to be a big issue. But yeah, if she were confined to a nursing home, we need written proof that it's expected to be a permanent stay and not leave. But if we get that and she does improve, we would still continue to pay those payments.
Okay. Mm-hmm. Well, we thank everybody for being with us today. The single premium life sales and with Equitrust in particular have exploded here at Great Plains over the past year. We've had the opportunity to work with Equitrust since the inception of Great Plains. They're one of the flagship carriers that Rich put on when he opened the doors here. And Matt and Jason and all the team at the home office do an outstanding job. Are a very agent-friendly company and great to work with. We've got many agents that have discovered by just asking one more question at every sales interview they're on, they're creating very wonderful opportunities to help clients without giving up control of the money, pass these assets on, provide chronic care coverage in the event they need it. It's just a wonderful policy, and like Matt said, now that you've got the opportunity to go in and even capture qualified funds for clients that hate those RMDs, don't want to take the money. What a tremendous sales opportunity for all of you. Just please want to remind you, call that 800 number, 800-710-1115. All of our marketing specialists here can help you run an illustration for you. Matt mentioned that flip chart. We've got those in a PDF form. If you're contracted, we can get you a hard copy if you need it, but we'd have that available. And just get into a call with one of our specialists here, do some case development, and find out what kind of opportunities you've got. I want to remind everybody that we're also offering between now and the end of August, all our Equitrust production will qualify for double credits for our Legends of the Plain golf incentive we've got. That'll be held here in Kansas City the last week of September. So be sure and ask your marketing specialist for details on that. Thanks for your time today. Please contact us for assistance, and have a great day. Until next time. See you soon. Bye-bye.